And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Forecast. Monday, November 1st. Hard to believe November already. I'm John. Thanks for trusting me with your time. As always, hoping you had a safe and nice weekend, nice Halloween. I've got a bucket of candy we overbought, so if anybody of you want some candy, come on by. I certainly don't need all that candy laying around, so as always, we're thinking about context. What is the market attempting to do, and how good of a job is it doing getting there? We're always thinking first about risk management and trying to remain patient. This morning, as far as economic numbers due out, at 8:45, the PMI Manufacturing Index, 9 o'clock, the ISM Manufacturing Index, which is probably the more important of the announcements today, as well as construction spending also due out at 9 o'clock. As far as this week is concerned, it's a relatively busy week as far as economic numbers are due out. Just to kind of review, tomorrow not a very busy day, but the FOMC meeting does begin. We have Red Book at 7:45 Central, and a couple of small bill announcements and auctions. On Wednesday, ADP employment report 7:15. Always an early one for that. And then we have the EIA Petroleum Status Report, and that's at 9:30 on Wednesday. 1 o'clock, the FOMC announcement. 1:30, the Fed Chair press conference. Always interesting. We are going to be having group coaching at 1 o'clock. I'm going to usually start that at 1:05 on FOMC day, just so we have a chance to see what goes on, at least even if we're not going to participate, just to see what happens. Thursday, international trade in goods at 7:30, jobless claims as usual at 7:30, and then of course the EIA natural gas report at 9:30. These are all, again, of course, Central Time, and then the unemployment situation, the unemployment numbers on Friday. So we do have a few numbers to be thinking about. We've got some long lists of earnings. We'll take a look at some of them that are due out, some of the more important ones that are due out this week as we move along. On traders' minds this morning, it has to be, the U.S. spending package. Apparently, they're planning on voting on that on Tuesday. All right, and the FOMC policy meeting later this week on Wednesday. Goldman has announced that they're expecting the Fed to move a little bit faster as far as raising rates. Goldman says they're looking at rates to rise as early as July 2022. OPEC meeting on Thursday. An increase in production is viewed as largely unlikely. As far as earnings due out this week, some of the major ones, Tuesday, Pfizer, of course, ConocoPhillips and BP. We've got some petroleum companies coming out on Tuesday. Thursday, Square, Motorola, Airbnb, Uber. Just kind of the ones that stuck out to me as I went through the long list of earnings this week, of course. And of course, make sure you hit the lucky like button. Make sure you share, comment, question, feedback, and heckle at will. Bears lost. We're all aware. Not looking too good. But I guess we've got to wait for the next Packers game, I guess, huh? All right. VIX It was up about 2% today, but still a very small number at 1666. That kind of scares me. Day after Halloween, 1666. There's a 666 in that number. That always, and I'm not very superstitious, but it always sticks out to me. Dollar index down slightly off its close on Friday at 94.07. And the 10-year yield still hovering right around 1.6. It's 1.59% so far this morning. So again, hopefully you've had a nice weekend. You've rested and ready for the opportunities that face us this week. As always, got to say good morning, Brian. First one in the room, you win the prize. Theo, Felix, Vince, Laura, Charles, Jimmy, George, Clem, Harry, Peter. Good to see you, Peter. Nelson, Harry, Robert, Three Lions Insight, good morning. Drew, good morning. Ed Nelson, blessed month and a blessed day and a blessed year. We hope that for everybody, of course. Yes, Michael, new week. Let's get going. I'm gonna try and get myself a nice start, slow start. I remember I'm not usually at my best on Mondays. I don't know why that is. Just tends to be that way. So I'm going to be taking my time and getting involved. Good morning, George, Angelina, Ryan, Jason, John. Jerry is awake. Hopefully John is too. Jacori, good morning. Dr. VJ, Spencer Rhodes. If this is your first trip to the market forecast, welcome. Glad you're here. We're going to try and take a look at these markets in context through the lens of risk management, as always. Alfred, good morning. As the numbers we kind of focus on here are the popular ones, or seemingly the most popular ones here at Top Step, the crude, even the S&P, Nasdaq, gold, the euro, the 10-year, and now the nat gas. Very interesting market that has been and is looking like it will continue to be. So let's jump into the charts. We got plenty of time. I'm kind of liking this 745 chart. It takes a little bit of pressure off of me to try and rush through all these charts. Maybe we'll get a little bit more opportunity to think about and look at more information from those markets. Mason, a good day for a colonoscopy. Well, I guess we are taking care of ourselves if we're going to take care of that. And any day is a good day, I suppose. But I think more than once every 5 years is a little too much. Terrence, good morning. All right. Well, let's take a look, as always, starting with the daily in crude, no particular order, just going left to right. Everybody knows the rules. All right. Now there's a chat name for you, Wuhan Tourism Bureau. Good morning, Wuhan Tourism Bureau. All right, so let me get the right mouse here. Volume is maintained as we started to kind of fall into some sort of range-like activity here. We continue to see open interest drop since the 18th of October, which was roll day. Some of that's rollover, some of it's not. We've lost about 5% in open interest since switch day. That's a little high. A lot of indecision, I think, in the marketplace, and we're, of course, going to be dealing with that this week as we wait for API, EIA, and then Thursday, the information coming from the OPEC Plus meeting. So we're kind of balanced here between the two weekly kickoff levels. Pretty sure that they are exactly where they were last week. So we looked above last week. We looked at the low last week. We're still in between them and waiting for perhaps new information. Taking a look at the 30-minute chart here. We are looking at very little to no overnight inventory. We've now opened, and apparently we have left a gap. Well, gap rules say if we can't close the gap relatively early, we look for opportunities in the direction of the gap, which would put us directly up against a resistance level that we discovered was relatively resistant. We did take a look above it, but we were unable to close above it at any point last week. So last week's high is all the way up here, weekly kickoff here, point of control here. It makes sense that the market is going to kind of target those levels, especially that naked point of control from back here. Looks like about on Tuesday, which remains unchecked. So with a gap unclosed, this looks like a very easy target. The question then becomes, is it big enough for me to withstand the risk I have to get into it? At this point, I'm really kind of looking at it like I'm not really that interested. I'm going to see what happens probably if the market gives me that change. So we're looking at likely short time frame control inside last week's range. Okay, we've got last week's range. We've got OPEC meeting Thursday. We have EIA and API numbers without some sort of news, and every time I say this, I end up eating my words, is I'm not looking for anything big to happen until we get later on into the week. Every time I say that, the market turns me into a liar. So trade what you see. Be patient. The market is a little bit out of balance in the fact that it's opening out of Friday's range and value. But again, opportunities are going to come no matter what. So just take it easy. Be patient. Wait for the right opportunity. Let's jump into the E-mini S&Ps now. Good morning, Ricardo. Good morning, Nemo, Patrick, and Dan Trader. Good to see everybody. Right. So you may be asking yourself, how did I get here? No, that's not. Why did John leave the weekly kickoff level at 4,600 when basically we traded above it? We traded right at it. We traded right to it. Isn't it used up now? Well, we didn't close above it. We drove towards it. We didn't, really do anything that impressive above it. 4,600 was that level. We got 3.5 points above it and then closed below that level. Do we have a late spike? It kind of looks like it. And right now we are open and above that late spike. If we open above the range, this inflection level, that's going to mark acceptance of higher pricing. So we're going to start to use the weekly kickoff high from this week as a potential weekly kickoff low. I've got a measured move up here to 47.10, which would be my next weekly kickoff high. It's a pretty decent move. That's 110 points. Not too far away, definitely within vision. And these equity markets seem to be able to do just about anything. They are very resilient. There's a lot of, uncertainty. We don't know what's going to happen with anything that we don't have any control over. So we're going to trade what we see. And what we're seeing is, we've got open interest loss on Friday up to this level. Got to remember, never fade the late rally on a Friday. We've had 2 late rallies on Fridays that have just been vicious in the last couple of weeks or months. So we didn't close above it. 47.10, the next weekly kickoff level. 4,600, supportive if not pivotal. So here is our kind of late spike here, but we didn't close above or necessarily in the late spike. We settled 45.97. Then the late spike kind of continued. So I'm still viewing this as a late spike. There's, the base of the late spike where the market broke out of, which is just about settlement. So when I look at this chart, I think, okay, well, yeah, we've got some overnight longs here. How long are they really? I mean, really, we opened here, we're here. We don't really have that much overnight inventory. We may open with a gap, which would be an opportunity for us to try and see if we can not close the gap so we can look for continued acceptance of prices above last week's high, above all of this information from last week. So again, if we open above or within the late spike, that's acceptance of higher price. We look for opportunities to buy longs. We open with a gap above last week's range. That's also, if we can't close the gap, we look for opportunities to look for the long side. There's a high target environment here in the fact that we've got last week's high, we've got value high from last week, we've got weekly kickoff from last week, we've got settlement from Friday, and we've got the point of control from Friday, all relatively packed into this neat little package that we're going to call a fishing hole. There's fish in here. Finding them is one of the hard parts. If we open with the gap and we spend too much time inside value, that may indicate that value has been reaccepted from Friday, and we could push price all the way back down to the low of value. If we can't close the gap, then we're going to be looking for continuation to the upside. But this area of fish here is complicated. There's some good tuna and some wahoo in here, but there's also some piranhas, barracudas, and sharks. It's going to be an interesting situation if we get into this area where there's so much convergence in such a small area. We've got our 50 session exponential moving average on the 30-minute chart, just about in that area. It's going to be an interesting one, but I'm thinking if we get to this level down here, there's some fish. Remember, they're not all good fish. All right. Nasdaq. Nice breakout to the Nasdaq last week. Here's the daily chart. Structure, volume, open interest, all healthy. We had good volume. We had good direction. We have good structure to the upside. Open interest, we added another 6,000 in open interest on this move to the upside while maintaining volume. Everything looks rosy, which scares me. Last week's high has so far been supportive for our overnight activities. We're going to have to see how that plays out for us in the regular trading hours. We also have a more true late spike here in the Nasdaq. Let's take a look at the 30-minute chart. Okay. So, do we have any overnight inventory? No, not really. The market opened here. It's here. There's no real direction here. Even though we're above settlement, I don't see that there's overnight inventory. And by the way, settlement 15,838.50. Okay. Look at that last 30 minutes of the day. Okay. This is the 3 o'clock close. That 2:30 to 3 o'clock, we extended the range higher and we closed above it. In regular trading hours, we have not yet had the opportunity to see if the market accepts above or in that level. We're looking for that now today. That's the late spike play. Okay, we've got no overnight inventory. So far, if we were to open now, we would open with a gap. If we can't close the gap, well, that tells us that the market is accepting higher prices, and we're going to look to move this market higher. But there are lots of potential entries, which is going to complicate things for us today. Lots of potential entries. I'm not really looking. Well, of course, there's the gap close, because that's going to take us to the upper extreme of the late spike. The late spike, there's two opportunities for us here. We've got 15,810, which is where the market extended the range from, and then you've got the base of the market right here base of the late spike, I should say, right here, which is just a little bit off there. We're going with 15,780. So both of these could be interesting areas for fish. So, but I don't want you to get into a situation where you take a loss here and you take another loss here and you take another loss here and then watch the market to kind of go your way. It's always tricky. They never make it easy for us. I would suppose that the best thing that could happen is we were unable to close the gap. We're able to get a decent price according to overnight lows. I don't see that necessarily happening, but in a perfect world, that's what I would be hoping for. And if we can't close the gap, obviously we're either going to range or move higher over time. So it's going to be an interesting open here in our equities. Gaps, late spikes. What about the value area special situation play here? What if the market comes in and spends too much time inside value and monkeying around with this, and traders decide, you know what, this is we're reaccepting value from yesterday, and upon acceptance, which is a subjective term, of course, that makes the market more likely to rotate all the way back to the low of value, which we just talked about in the S&Ps. So you got kind of dual situations here. If we come down here and reject, we go higher. If we don't close the gap, we go higher. If we come down here and don't reject value, then we may see this market rotate lower, whatever it is. There's fish here. It's going to be a little tougher to find them. I'm going to have to try and get myself a fish finder. Gold. Not much has changed. We did break out of this, multi-contacted trend line, which kind of breaks our medium time frame market state change, but does nothing to the longer time frame market state change, that we are in range and we are in balance, that we are just in an area of short time frame control. This medium time frame cracking doesn't really change that much. Again, long time frame range intact. Volume continues to be up and down. Open interest, we lost 8,600 on this breakout move to the downside. So no new sellers coming in. Maybe some people just deciding to get out of this market for a little bit of time. This market is a little bit of a back burner for me. Look at where we are right now. I mean, we've got an inside day in extended trading hours. There's not a whole lot of opportunity here until I say that, and then all of a sudden there's a 200-point move. We've basically taken what was support, we've traded up to it as resistance as the day has gone on here. Okay, we haven't really had an overnight inventory with which to speak of. When we opened here, if we're a little bit long, that's okay. This line right here is that line that's coming across on the daily chart that's providing a little bit of resistance for us. We can try and use that even as day traders. We've got the high of the range from Friday with which to kind of look at as opportunity for resistance. We've got that trend line. We're a little bit long in overnight inventory. Again, not looking for huge opportunities here. The bigger areas that I'm going to be looking for, some of the bigger opportunities are last week's high and low, and particularly to the downside, the low of the weekly kickoff low, which is 1767. Got a little things going on down here. I'm pretty sure there's some fish. I'm going to stay patient, choosing patience. The euro, the 6E. Got a couple more markets to go through. So the weekly kickoff levels for the 6E for the euro have not changed. This is 1700 is weekly kickoff high, 1548 weekly kickoff low. Friday, we did the gamut. We went from high to low. We haven't changed anything. We added 4,300 in open interest, which says it's a little something about something going on here. But both sides were tested and held last week. Take a look at the 30-minute chart. It looks like a big swing for the fences in both directions on Thursday and Friday. Now what do? We do nothing. 115.68.5 ticks is settlement. We don't have much inventory. We don't have much going on here. We've got support at weekly kickoff low in the overnight. Look at this profile. Looks like vampire teeth. These high volume nodes are going to be targets. This is the point of control right here, although it doesn't look much like it. I changed my charts out to the new charts instead of the legacy charts, and I'm going to thicken this one up, and we're going to make it real green. Apply. There, now we've got our point of control. A lot of repair, a lot of potential for this market to just come back and fill in some of these low volume nodes, recheck some of these high volume nodes. A bit of a wander today, perhaps. And we got the 10-year and the nat gas left here. Rates continue to just kind of hover. We've got weekly kickoff high and low remain the same from last week. We've got inside those levels for the range for last week. We're probably going to be doing a lot of hurry up and waiting this week in our treasury markets because of the FOMC meeting. Lots of potential speculation for when they are going to change rates, which will, of course, affect this market. We added, 800 in open interest on Friday. What a big zero. Big range. Big opportunity, but just a doji, no real change, an indecision. And it shows in that open interest. Here's the 30-minute chart. Settlement, 130 and 22 and a half, 30 seconds. Where are we? Well, we've got some overnight inventory to the short side, but we're inside value. We're central inside value. I'm staying patient. I am certainly going to be staying patient in this market. We've got a last week's low and a naked point of control below. We've got no unchecked points of control in recent activity above. I'm staying patient in this market. Again, there's very little change to the perception of value. Therefore, not a lot of opportunity. I'm backburnering this market until something changes. And again, that may not be until Wednesday at 1 o'clock. And, here we still have our net gas. Okay, here's the daily. What a fascinating market this is. I'm really happy that we've started adding this because I'm really enjoying getting to know it, and I'm enjoying looking for opportunities to profit in it as well. Month-long balance we've been in now. Hard to say. I guess it's hard to say. I mean, we're coming into winter. There's going to be some high demand. Everybody's well aware that that's going on. We know what's going on in Europe. But apparently, that's not enough to continue driving price higher. We've been in a balance for a month. Weekly kickoff levels for the nat gas, 612.8. So $6.12 let's just call it $6.13. And the weekly kickoff low is $5.07. Okay. This up here, this 640 is it's a swing high from back in 2014, if I'm remembering right. That's why I threw it up there, because I figured it was going to be somewhat important. We've had one close above it and then rejection from that level ever since. So the island low that we put in week before last, now invalid, obviously, 30-minute chart. So we've got a settlement here, last week's low right in the neighborhood. Settlement was $5.42.6. 5,426 settlement. We've got space down below for weekly kickoff levels. Overnight inventory has been adjusted back to settlement. Gap closed. Acceptance inside value? No. No acceptance inside Friday's area of value. So with the gap closed and no acceptance of value, we would be thinking probably to the downside. We got to be cautious about that. We do have space down there. We got plenty of space. And see, there's weekly kickoff low, weekly kickoff high. So there's definitely space. I think my favorite, or my preferred hypothesis would be for us to come back inside and accept value from Friday, because I think it's a relatively expansive range. And if we if we opened below, which we did, we closed the gap, which we did, we have no acceptance of value from Friday, which we know. But if we start to kind of creep up there and start spending some time up here, it may mean that the market is rejecting lower pricing, accepting value from Friday. And the kind of rule says if we reaccept inside value from a previous day, that when we open outside of that day, that marks acceptance, and we may have a higher probability of a rotation all the way back to the high of value from that day. So value low from yesterday, let's call it $5.45. Acceptance above that level increases the probability of a move back towards value high from Friday, which by the way, that number is, let's just call it 564. Close enough for rock and roll. So definitely some things to be thinking about, looking at. We're seeing some areas where we may find some fish here early this week. Again, going to be looking forward to staying profitable this week and staying patient for sure. Definitely staying patient this morning. Ryan's asking from South Africa, I want to check in when the clocks change in the U.S., daylight savings or coming out of daylight savings time, whatever it is. It's not for a couple of weeks. If somebody can either that knows the date, please put it up there, or somebody Google it and throw it up there, because I don't want to sit here on Google. But Ryan, if we haven't figured it out by the end of today's session, I'll tell you tomorrow. I wrote myself a note. So, all right, we've got about 10 minutes here before the equities open. Ryan, I think it's in a couple of weeks, so I don't think you have to worry about it just yet. I think this weekend was the weekend that we used to do it. A lot of automated clocks already changed but it was not. November 7th in the U.S. UK time changed yesterday, next week. Thank you, Richard, George, UG, Steve G. Ryan, perfect. Excellent. Thank you. Thank you, folks. All right, let's take our deep breath. Oh, one more thing. Group coaching today. Mondays and Wednesdays. Here's the link. Please join us. Ask some questions. Always have a good time. Always enjoy those. It's also on Wednesday, so you can sign up for both of them, I think, with one fell swoop. And I'll look forward to seeing you there. Deep breath. I hope you guys do this. It always makes me feel good. Let's get out there and profit. I will be in the pit in about 5 minutes, so look forward to seeing you there. Trade well today, and I'll see you later for group coaching. And looking forward to it. Have a good one.